Good day. Ira Epstein with your SPDR, ETF, and stock analysis video. And this is for Wednesday, the 6th of April, 2022, about 5:35 p.m. So if you look behind me, a lot of green. It was a day where we heard Janet Yellen talking about how the economy's doing. We had a day today where the FOMC minutes came out, and it was important that Lyle Brainerd yesterday came out. Remember, she's our vice chair, and she's talking about what she thought, and she was right on the money. The Fed, it looks like they're going to go with $95 billion a month of a rundown rolled off of the balance sheet. That's billion a month. 60 in Treasuries, 35 it looks like in mortgages. It appears they're ready to go for the half-point interest rate hike in May. The only reason they didn't go with it was in March was simply because of the Ukraine invasion. They decided to hold off, but now they're ready to go. And I got the impression in reading it, and I wrote about it tonight for my subscribers, that they're pretty hawkish. They want to get ahead of the curve. They want to slow this thing down. Now, the hardest thing for the Fed is going to be how do they slow it down and do this without putting the economy into a recession. And how they do it is they keep a strong labor market. So if they can get their arms around all this, do what they're saying, and the labor market stays strong, and I think the labor market will stay strong through the spring at least, maybe well into the summer. It's the fall I worry about. But all this, everybody's going to be outside, a lot of hiring. Can you imagine all the restaurant business, the service industry is going to go crazy in hiring people. In Chicago, they've got a whole program. They're trying to hire lifeguards now. So it just gives you an idea. You watch these things and you see what's going on. So mostly red. Okay. Twitter backing off a little bit, not a surprise. As you know, I talked about the key moving averages it hit. The swing line is up. The market hit the 200-day average of closes yesterday, hit it again today, backing off. There is a gap in the chart. You don't have to fill it all at one time, but that gap's like a magnet. One that size often gets filled. Does it have to? No. You could just say this was pre-Elon Musk, and this is the market after his investment in it. It's one way to look at the market. You're also over the Bollinger Band. You rarely do that. But I'm very concerned with what stochastics are doing because the market, if we look at them, they're fully embedded. Not here. Let me come to the day before. Not there. So now, day one of embedding, Monday, Tuesday, Wednesday. This is good news. It means first that on the break, the trade's going to try to buy the market. Second, if this market closes under 79, I think you'll fill the gap. I think you'll lose the embedded reading. It'll be like a magnet to make the market fill the gap. So two important points here. I'm going to be all over it and watching it. In AMC, you're down to the point where I think that the market's fairly valued again. I was telling you I thought it would come down. One of you, I appreciate, you wrote on Facebook, you went into the theater the other day and it was you and your wife and nobody else. I've had that happen to me too. I don't know how they make money on typical movies. If they get the great movies out, when Spider-Man first came out, that was pretty big, and everything was filling up. Tell me what's filled it up since then on average. Batman didn't do as good, so I don't know. Summer's coming. We can hope we get some of the blockbusters. You want to see some of the new movies that come out with Tom Cruise and the others. Ambulance is coming out. There's going to be some hopefully good movies that do it. But I think you get down there, and this is where those that were planning to come back to that level probably got what they want. In Apple, I've been looking for a pullback. You lost the embedded reading. Now watch this. You lose the reading, and this is today. You're probably going to make your challenge again at the 18 and the 100-day average. And the market is saying, nah, the 170s right now with all that's going on behind the market in this particular environment's a bit hefty. It doesn't mean Apple's not in good shape. It is. Disney got smashed. And it really failed yesterday. That's when it had the lower high, lower and low setup, which is a surprise to me because they're going to get so much traffic. I just saw the Carnival is talking they had record bookings for a week. Just happened. So, Disney's going to fill up with people, but in the meantime, it's got hit. And if you'll notice, they're getting hit pretty good in losing subscriptions on their streaming service at this point. I was a subscriber and I quit. At first, it was exciting. I loved a few things on it. Certainly loved one of the shows a lot. And, now it's not playing for a while. And I just backed away from it. I found nothing there that was for me. Maybe it's for the kids. Maybe I'm not a kid at heart anymore. In XLF, higher high, lower low, coming down again to 37.02. And by the way, I want to bring that up. We're going in the spring and summer. There's going to be a lot of problems with the streaming services maintaining subscribers. People cut their budget back. Hey, I'm going to be out at night. I'm going with my friends to the bars. I'm doing this. I'm doing that. And a lot of young people, this was their mode. That's cutting. And office. People are going back to offices. Streaming services could have a big problem right here. In the industrial sector, this doesn't look good. This is bearish. You're oversold already, but you can easily hit that Bollinger Band to finish this break off. Same thing in XSD, the semiconductors. I've been in the bear camp in these for a while now in my paid subscriber service, and watch out. Could be headed to the 185.22 level. Homeowners getting smashed. There's nothing going for them. Did you hear what the rates of mortgages were today? I was listening to Bloomberg on it. 5.08%. Even if you have money, that hurts you as you go to qualify for a new home. And that's the problem. There aren't more new homes. That's why you're getting hurt here. And I don't think the home builders are being too aggressive on wanting to fill them up, because these mortgages make not only the inflation of building the home, but the home's going to be more money. And now the buyers that have to qualify for it, they're getting hurt. On the energy sector, well, today we saw that Europe at least came to the game, and they're going to give 60 million barrels out of their reserves. You're flubba-dubbing back and forth. Now you're not going anywhere in this for the time being. Gold. Gold gets exciting if you can clear one of these prior highs. Notice where it keeps failing. I have told you, and I said it coming in yesterday, I said I think the pros are going to sell here with stops over this number, going short, looking for the lower band. But now I'm nervous. Suddenly I'm seeing how narrow those bands are going. I have a policy. When I see them get that narrow, I don't want to play, because you start doing this. Remember I said it, I used the term to you about a week ago, porpoising out of F1. If you've watched the new F1 cars, the new design, and they're fighting it with Mercedes, it's terrible for them. As the car picks up big speed, remember these are 200-mile-an-hour cars, they're doing this. They're going back and forth with the porpoising. And as that porpoising happens, they got to figure out how do they keep the ground. It's sucked there, not where it sucks in, it releases, sucks in on the ground. Well, it's sort of like that here. You're moving back and forth with it. It's a downtrend, no question, until you take out the highs of yesterday. Tomorrow, if you take that out, fine. Even if you take it out 2 days later, it won't matter. You're narrowing in those bands. I want no part of it anymore. Gold miners, the same thing. I think you're caught in this narrowness. You're just going to be porpoising again. Copper. Copper peaked short term. How far down it wants to go, I don't think it's very far. The market now has a higher high, lower low scenario. I've got the wrong arrow there. I should have pushed it right up to the top and pointed it down for you. TLT, well, you're down to the lower Bollinger Band. Are you embedded? No. So contra to what everybody's going to say, oh, you want to be betting interest rates are going to drop this market. My work is saying you come out of shorts, wait for the market on big bounces to do anything, because the odds of staying under a Bollinger Band are 5% of the time. I want to be with the 95%, not the 5% of the time. UUP, all the way up to the upper Bollinger Band. You know what I'm going to tell you? That's where I think the pros are coming out, not into the market. And the flip-flop at FXE, the other way there. So when you put this all together, I want to remind you, if you want to see my special report on the S&P, just click it anytime up here. And for those of you interested in that report, what I covered in great detail, and you don't have to now copy anything. Remember to just click up there. Is you're going to see me covering the weekly, the monthly, the daily charts in the S&P. That's the only index I'm covering in this. Seasonal charts, the price counts that you just saw. Then I'm going to give you a big discussion on inversion, what it means, how long it has to stay in place, and it's failing on the inversion. You can't just flip over it and back under it and say that it's staying inverted. That is not happening. And then the big news, how do you filter it with employment? So I put this all in there, cover it. It's a neat report. All you have to do to view it, take your cursor, go up here, click it, and away you go. I'm Ira Epstein. Have a great evening. I'll see you tomorrow.